Hey, we got one of our favorite people calling in from Go Eagles, Go Eagles. John from Philadelphia. How are you, my friend?
I appreciate that backgrounder on the Eagles quarterback. That story I hadn't heard, so thanks for sharing.
Yeah, he's a super nice guy, no question about it.
Say, Larry, I wanted to ask if you could go over patterns with me, please, on wheat, corn, and beans.
Okay.
For full disclosure, I'm long all three of them.
As you should be.
The July new crop Kansas City wheat futures, and then the active and lead contracts on corn and beans. And as you know, I've been probing for lows since December, and they're starting to move up. And my question is, pattern-wise, do you see prospect for further rally? And can you give me some guidance on either one or all three of them, please?
Okay, John, let's start out with the soybeans. As you can see, we had a nice little rally on Friday, and I'm looking for a little bit of a pullback where we're sharply higher this morning, I understand. So this one looks like it's really turned the corner. That's another one that looks really interesting to me. But if we switch over to the wheat and just take a quick look at the Board of Trade wheat, and you'll see here that we've had a pretty significant bottom here on December the 11th. That was, Norm Winsky's, huge cycle day. We had a big three-drive pattern there with two 1.618 expansions coming in, absolutely perfectly. Then we had a pullback that went just slightly below the 78% level. Then we've rallied here for the last 4 or 5 days, and backed off for a day or so. So I really believe that this wheat is really got legs. I mean, it's starting to look like a head and shoulders pattern. So that's another one that looks incredibly well. And the final one, of course, we'll take a quick look here at the corn, and we'll look at March corn, and we're going to be switching over to July here pretty soon. But if we look here at the corn, it looks very similar to the wheat. But the corn has had three major tests of that 340 level, which is the theoretical cost of production, as you know. And so these all look good, John. I like them all. Are they sharply higher this morning? I understand they are.
Yes, I'll quote you. The July Kansas City wheat is 461 up 3. March corn actually is up, is 354 up 2. And the March soybeans are last 986 up 9. So corn and wheat just up a touch, beans up more, and the soy meal is actually up close to 2%. So that seems to be where all the buying is focused. So that's where we stand right now. Larry, I wanted to just contribute just a couple of observations for you on all three of these. I'll just share with you, I haven't done anything with corn for literally 12 months, maybe it's longer, and I saw things fundamentally, technically, pattern-wise all setting up that I took a new position last week. Nothing major yet, of course, but so I'm attracted there. Two observations to share with you. The CFTC data coming out every Friday afternoon, which documents positioning of commercials or hedgers and speculators. Something is very highly unusual going on right now, in that corn, beans, and wheat are all just, I mean, let's call a spade. They've been very, very quiet. Yeah, you get 5% moves up and down, but in the scheme of things, these markets are dead.
John,
hanging there low.
We got to pay a few bills. Could you please stay on with us? We have to pay a few bills. I want to talk to you more about this, especially about the open interest part. Could you stay with us, please?
Will do, folks.
Okay, we're back, folks. We're talking with John from the Tiger Den, Mr. Z from Philadelphia. John, we were talking about the grains and how this open interest is starting to look sort of interesting, but the fact that there seems to be no interest. The last time we saw something like this was one of the most explosive moves we had. If you remember back several years ago, when beans got up into the teens, a lot higher than where they are now, we had the same type of situation. So do you think it could possibly be weather related, the fact that we have this really extreme, cold weather, and now it's followed by almost springtime weather?
Do that, Larry. There's an emerging drought building right now in the southern plains, the heart of the winter wheat area. I'll just to elaborate further on that open interest and CFTC data analysis. The bottom line is speculators as a group are heavily shorts beans, corn, and wheat, all simultaneously. Now, that sort of phenomena I've seen before when major bear markets have been in force. But when you look at the price charts on corn, wheat, and beans the past 1 year, past two, look at the weekly charts, what you see is not a declining market. You've just seen a dead flat market. And for reasons that I don't fully understand, speculators as a group are very bearish on all three of these, and yet price isn't falling. So there is this latent fuel to ignite, buying fuel, I call it. Should, for whatever reason, the bearish speculators change their mind and start covering shorts. And I will just, from a weather perspective, I'll just reiterate, the southern plains is in moderate to severe drought. Now, right now, that doesn't matter much because we're not, it's cold. The plants aren't growing yet, but wheat will be emerging out of dormancy literally in 5 weeks' time. And if this weather pattern persists, we could have a situation very much like we had in the winter of 2005 into the spring of '06, where a winter drought took hold then and continued into the spring of '06 and was the catalyst for a smaller winter wheat crop and higher winter wheat prices. And lastly, I'll just tell you there's adverse weather that's been building in Argentina, which is affecting their corn crop. It hasn't changed price yet, but it could. Hence my interest in those price patterns. So I appreciate you going over those with me.
Yeah, John, I wanted to tell you that some of the folks in the den wanted to thank you for I'm going to put this chart up that you gave us on the cocoa 2 weeks ago, back on January the 8th, when it was trading around 1840. You came into the Tiger Den and explained this pattern that we were looking at, the fact that it had made the 78% retracement and pulled back one more time. That made well over $1,500 over the next 7 days, and is still considerably above the price that you bought it. Are you still looking at higher prices in cocoa?
Well, like you, Larry, I do see that pattern where in fits and starts that cocoa market bottomed at 1804, and it's making higher highs, and each low is a higher low. So that's a definition of an uptrend. So
yep,
I guess we'll just keep playing that.
Yeah, that's another definition of the 135 pattern. So kind of keep an eye on cocoa. It should have really strong support in the March cocoa around the 1890 level. And of course, your risk there would only be a few $100 because cocoa, is a very, very non-volatile compared like we have in bonds and things like that. So, John, I want to thank you for calling in, my friend. We always love to hear from you. Keep up your great work, and go Eagles.
Absolutely. Yeah, we'll look forward to that game 2 weeks hence. Thanks so much, Larry.
You bet. Thank you.